Oh, baby, do you know what that's worth? Ooh, heaven is a place on earth. Stay in heaven, love comes first. We'll make heaven a place on earth. You ready? I'm ready. What's up, sons? It's Blind Rod with Son of the Tech once again, and welcome back to yet another episode of the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I have shifted this format into longer format to basically cover broader topic in depth, and then during the week we run the blocks show, which covers basically all of the new things that are happening on a daily basis. Of course, some of that is being supplemented with talking head videos as topics come up that need a little bit more attention than others. And of course, we had quite a few the past couple weeks. I mean, we bounced from controversy surrounding Flux and Dynex to controversy surrounding kaspa, and so on and so forth. I'll do my best to cover it as much as possible and as unbiased as possible, which can be extremely difficult when you are also holding bags, of course. So I try not to let that affect me whatsoever. If you're interested in the bags that I am holding, you can always go look at sonofatech.locals.com. Yes, there is a supporter option over there, and that unlocks all of the supporter content. That is important basically as a filter to stop way too much influx into some of the smaller coins that I talk about. Eventually they do come out on the YouTube channel, but when some of these coins are very small and just starting out for the past few days, you definitely want to be careful of not flooding those networks. So that's kind of why it's a little bit of a filter to get through that. Today we're going to be talking about Bitcoin, a consolidation probably back into Bitcoin. We're going to be talking about proof of work and the resurgence in cryptocurrency mining as it pertains to not only ASICs and FPGAs, but also now, thanks to Dynex by and large, of course, GPUs are starting to look a lot better. If you are paying attention and playing the game, it is definitely possible to be profitable even as a home miner now. There are a lot more things you have to do to make that work, and there are definitely stop losses you need to put into place. And I want to remind you guys, we hodl silicon. So if you are mining and holding, you need to understand that you need to at least be thinking about taking out to cover costs. And this is just something that right now is going to be extremely important, because a lot of these networks that are starting to blow up for proof of work are extremely volatile. So set your sell orders so that you can cover your costs, and don't get yourself into a position where your power is going to get shut off or something along those lines because coin A dumped 50% in a day and you thought it was going to go up. There's no reason to be irresponsible from that perspective. As always on this channel, I think that I've said it before, and I need to actually reiterate this more and more often. This channel is about building revenue streams. This channel is not about hodling a coin. Why is that? That is because you cannot control outside factors such as the price of a coin, right? It's not going to be possible. You don't know if BitBoy is going to come out tomorrow and buy 6 Bitcoin worth of kaspa, or if kaspa is going to break tomorrow and some mind-blowing bug causes the coin to tank, for example. None of these things are going to be a given. And that is also why I have always prioritized GPUs on this channel as well, because GPUs are the most versatile. And there is technically this aspect of FPGAs that we've talked about before that are quite versatile, but that is still unfortunately locked into a position where it's almost like a cult-like behavior surrounding FPGAs, meaning that your bit streams are very hard to get a hold of. The hardware is extremely hard to get a hold of. And even if you do get a hold of that hardware, you're kind of beholden to extremely high developer fees. There's more competition on the GPU mining side. It's more ubiquitous. That being said, you should be diversified to a certain extent into some sort of alternate mining options like ASICs, for example. And we'll talk about, I've talked about my strategy surrounding that now or previously, but we'll talk about that a little bit more today too as we go through this. I only have 3 articles to get through today. And the first one that we're going to be covering is going to be large crypto miners benefiting from more capacity, the competition that's going to be flowing back in, and a little bit of hopium for the Bitcoin guys and cryptocurrency as a whole, because obviously a rising tide raises all ships, as Bitsby Trippin famously says surrounding cryptocurrency and Bitcoin. And the Bitcoin price can go full bull market next month if the 200-week trend line stays. And that does mean, from the perspective of a lot of the other altcoins that are floating around, you could see a consolidation back into Bitcoin if this holds true. So it's something to consider when we're going in and deciding how we're going to be playing the markets as far as what you're going to do with your mined income, etc. So let's go ahead and get into it right after a word from today's sponsor. Today's sponsor is BT Miners. BT Miners has been a longtime sponsor of the channel and a proven reliable source for ASIC miners. If you're looking to purchase ASIC hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICminervalue.com and CryptoMiner.com. Follow the affiliate link in the description and tell them SOT sent you to support the channel. All right, guys, check out BT Miners for me. They are the ones I got my Antminer D9 through, which has actually ended up paying off quite nicely thanks to the new project called Block X, which I covered on the channel earlier this week, and I am continuing to mine that daily. And even though the block reward was cut in half to give 50% of it to masternode owners, the price of that coin in particular did double, which means that it is still making the same revenue that it was prior to that halving and the implementations of masternodes. So these are kind of the things that you got to pay attention to in the mining market so that you can basically win. And it's a different game than what is being played by the large miners. And so you need to keep this in mind, that you aren't playing the game that we're about to talk about here, but you need to be aware of this game, right? So what are we talking about? Well, it's the largest crypto miners will benefit from capacity growth, says Bernstein. Large miners, or larger miners with a low cost of production and low debt, are likely to be the big beneficiaries of increased capacity, the report said. I mean, this is kind of a dumb moment, I think, by and large, but there are some additional details in here that are interesting. So it goes on to say that Bitcoin miners are adding significant capacity, with the 16 largest publicly listed mining companies accounting for 16% of total Bitcoin mined, broker Bernstein said in a research report on Thursday. Bernstein said their combined mining capacity is currently 72 exahash per second, and notes the firms are planning to increase that by 182% in the next 2 to 3 years. Quote, however, the larger miners with low cost of production and low debt are likely to be the big beneficiaries of capacity addition, with greater capacity to withstand any Bitcoin price volatility and cost spike from upcoming Bitcoin halving in Q1 of 2024. And I actually have that pulled up for you guys right now. If we're looking at the Bitcoin halving countdown, it hasn't budged much. Remember, we did have a pretty significant increase in the, or I guess a significant acceleration of the halving schedule, and it is up to the 27th of March 2024. Historically, you aren't going to see typically a bull run up with the massive FOMO style investment until 6 months to a year after that. Usually you start to see an initial increase in the price based on the cost to mint, but There are some details in here that I think are interesting. The Bitcoin price is currently in the vicinity of 30,000, and 15 of the companies have a production cost below 15,000 per Bitcoin, the report said. And so previously, when we looked at this overall, as we were looking at the previous halving, our cost to mint was around $23,000. So these large companies are bringing that cost to mint down for themselves to around 15,000. Now, as with anything that is going on with mining, this does mean that you can push that price back down, because the miners, if put into a position where they need to liquidate, miners will liquidate to cover their costs. And this is something that no proof of work cryptocurrency is going to be immune from. Quote, with the upcoming halving, that would double the cost of production and would push a few miners to break even. So basically, because the reward in March is going to go from the 6 Bitcoin to 3 Bitcoin, 3.1 is 6.25 to 3.17, or however that plays out, something along those lines. I think I said that wrong. Got to double check it. But anyways, from 6 to 3 getting cut in half, theoretically, that increases the cost to mint by 15,000. In totality, from the charts that we've read previously, if we're counting all cost to mint averaged across all mining operations and not just public operations or publicly traded operations, we are looking at somewhere from going from 23,000 to 46,000. I've been of the mindset that we would be up to, in March or April of next year, to somewhere between 45,000 and 50,000. A lot of analysts are trying to say here that we would hit 45 to 50,000 by the end of the year. I think that is a little too accelerated. I don't think that we will technically see that until 2024. That's my humble opinion, not financial advice, of course. And that is pending that we are seeing traditional halving cycles still play a major role in the shift of the Bitcoin price, which then of course will affect the larger market. Still, if the market sees positive momentum from Bitcoin exchange traded fund approvals and increased institutional participation, that would give miners enough margin room for the 2024 halving. The note said, adding that the, quote, lower cost of production better than mining position for the Bitcoin having impact. The broker notes that the 3 of the miners have a debt to equity ratio of more than 1, which reduces their ability to withstand depressed Bitcoin prices. 4, Riot, Marathon, Hut 8, and Hive Digital hold Bitcoin on their balance sheet. This allows these firms to wait for higher prices before selling and make greater realized gains on the crypto they have mined, the note added. So essentially, we've been talking about this for quite some time, and I think CoinDesk kind of bounces back and forth between, oh, it's going to be bad for Bitcoin miners because it doesn't, the amount of Bitcoin that they're going to obtain is going to be lower than the amount they need, to cover their costs. But in reality, like we've seen previously for the past 12 years with Bitcoin, that is what directly influences the price of Bitcoin. And it's a little unique in the fact that it does seem to primarily be affected by Bitcoin and nothing else, meaning that most of the halvings across the board and so on don't have as great of an impact as Bitcoin has over the entire market. So I think Bitcoin is a little unique there. What I would hope to see, and we'll have to see how this plays out, is that we don't consolidate further and further into these large companies, but I think that's going to be more and more difficult. I think eventually we do see more and more consolidation of mining firms under large companies and entities that can get this cost to mint of Bitcoin lower and lower. And that is going to push a lot of the smaller players out. However, if they are running these margins too close, like a lot of them have been in the past, and they've gone defunct, and then we could see that shift back to the general public. I'm not really sure exactly where it's headed right now, but there is, evidence of still the aftermath of this bear market with Core Scientific. The company claims to have seen a boost in liquidity in recent months and is expected to emerge from bankruptcy proceedings by the end of the year. Publicly traded Bitcoin miner Core Scientific has appointed Adam Sullivan to its CEO. Sullivan, who previously served as the company's president, took the role on August 4th, while co-founder and former CEO Mike Levitt remains chairman of the board. Sullivan has over a decade of financial services experience, particularly in digital assets and infrastructure, with a background that includes strategy, corporate finance, and mergers and acquisitions. Before joining Core Scientific, he held roles at XMS Capital Partners, overseeing transactions totaling over $5 billion US, including Core Scientific's merger with Power and Digital Infrastructure Acquisition Corp in 2021. The switch in leadership comes amid Core Scientific's restructuring process. After months of financial distress, the company filed for Chapter 11 bankruptcy protection in December of 2022 due to low Bitcoin prices, increased electricity costs, and a rise in the global Bitcoin hash rate, and the bankruptcy of crypto lender Celsius. Chapter 11 bankruptcy allows a business to continue operating until stakeholders agree on a restructuring plan, which may involve downsizing operations to reduce debt or selling assets to repay creditors. In the bankruptcy plan recently submitted to the U.S. courts, Core Scientific claims to have seen a boost in liquidity due to higher Bitcoin prices, increased network hash rate, and reduced energy costs. The company is expected to exit proceedings by the end of 2023. That would be great timing, by the way, as you guys are aware, because we will be going into the halving. So getting this cleaned up, starting to see these mergers and acquisitions and bankruptcies all start to get cleared up right before the halving is a pretty good signal that the halving will still have the expected impact that we've come accustomed to across cryptocurrency in general. The question will be, what is the new thing that is going to kind of be the catalyst for the FOMO? At least in my humble opinion, we have always seen basically within cryptocurrency every cycle something that influences the market to have the average user jump in and FOMO in, right? So recently we've seen like this AI craze, and that is starting to hit cryptocurrency pretty significantly with things like Clore and so on, even some proof of useful work type stuff that is coming into play there with Flux. And then we have the Dynex side of things, which is doing the machine learning, etc. Is that kind of the next play? And if it is, then what we end up seeing, at least in my humble opinion, is a rollback of the proof of stake side of things and things rolling back into proof of work. And why is this? Well, AI and that trend requires compute power. So anything that ends up basically wanting to capitalize on the AI front is going to want to basically have some sort of proof of work mechanism to bring that into the play. So this is why I think also we're starting to see a lot more proof of work projects come into play as a whole, and it's because that will be the next trend, and you need the compute power to do that. We've been listening to a lot of people talk about these transitions, and once again, from the GPU mining side of things, you can put yourself into a position where you can transition into AI potentially with, granted a higher investment at the end of the day, but you can make that transfer into AI and you can actually diversify yourself that way. That's not going to be an option for the ASIC side of things. And so when you're thinking about how you want to build out your infrastructure and so on and what you're going to invest in, I think that's something important to look into. The other trend that I'm starting to see with proof of work is releasing of coins that are backfilling a lack of profitability for other ASIC units, right? So from the very get-go, Bitmain was extremely focused on Bitcoin. And here recently, what we've seen over the past cycles and and so on, is Bitmain has implemented basically strategies for smaller coins and additional algorithms that they can have a lot of influence over, right? And because of this, there has been the question floating around of like how many of these coins are just being stood up by maybe even Bitmain themselves or partners with Bitmain. I don't have any evidence of that, but I think that the idea is interesting because what we are seeing, of course, is an absolute ton of releases for basically ASIC compute. And this doesn't just have to be, kaspa. The ones that I'm starting to see now are ones that are basically something like the BlockX being the most recent example off the top of my head, where you have an X11 algorithm that, while profitable on the D9, the latest release from the Antminer, is not near as profitable as it was, previously. And the excitement surrounding Dash, which was the largest X11 coin, kind of fell off. And so you're starting to see coins that are kind of taking up that place. But the risk that you play there, right, is you end up just playing these weird pump and dump games of a whole bunch of proof of work cryptocurrencies. So while cryptocurrency mining has been extremely profitable over the past month, it's been extremely time intensive to make sure that you can capitalize on that. There are some tools that, I've utilized here recently. We talked about with NiceHash, there's mining rig rentals, some stuff like that that can kind of buffer you from basically being able to capitalize on the profits from these ASICs, but at the same time, not to the point to where you're jumping around all of the time. So just keep all of these things in mind when you start to play this game, and then kind of go from there. If you see, and here's kind of the way ASICs tend to play out, and this is the hard part, right? If we go to a mining profitability calculator for ASICs, right? You'll kind of scroll through here and it's like, oh, this one will pay off in, 0.7 months. This one will pay off in whatever it may be. But then if you scroll down and you find some that were similar to that, not only like, a couple years ago or even a year ago, something along those lines, like the KA3 for Kadena, this one used to be looking like the KS3, and now it is, 30 months. And so when you go look at these things, the problem is everybody else has access to this information. So if everybody is ordering that same thing and they all get them in at the same time, and it causes a spike in difficulty on the network, it causes more sell pressure so that people are trying to maintain their ROI. And the problem is that you are stuck to that specific algorithm. So that is why, once again, like looking at GPUs is something that I think is still extremely relevant these days. And I think it will prove out to be a little bit more relevant with the AI trend coming into play on this next bull run. But what you'll probably end up having, right, is a ton of random AI coins, and going through all of those and figuring out which ones are valid, which ones that you want to hold on to, right, for example, versus what is more profitable is going to be extremely difficult. That's why you don't want to get yourself too attached to a single project here. Even something like Dynex, right? Dynex looks really good. Everybody wants to mine it right now. Everybody wants to hold it. Well, if you're mining and holding, and then you hold that into the dirt, and then some other new project takes off, but you haven't covered your power bill, then you're going to be in a lot of trouble. So just pay attention to it. As far as the ASIC mining strategy that I've been implementing, it is purely on the side of trying to figure out how to lock in power costs through the next bull run. So even if you are going to go the route of hosting, and hosting can be extremely good in this particular case, then you want to make sure that you're locking in a power rate, right? Locked in power rates over the next 3 years, 3 to 4 years, something along those lines, is going to put yourself into a position where you don't have to worry about fluctuation of that of that cost of your rigs. And then everything else after that will be the revenue that is coming in. So because it's more difficult for smaller operations, like let's say you're running 10 to 20 ASICs or something along those lines, that's not going to be quite enough to get a locked in power rates all of the time, depending on your area. So that's when probably hosting comes into play there, from my own experience, as far as all this goes. But if you can, there are still, you can hunt down a different, I think Texas has a website. Most states have some sort of website where you can compare rates, and you can get in basically unregulated power areas. And in those sections, you can call different power companies and see if you can get a locked in rate. That would be one strategy that you could utilize there. But what we are running into, I think, at the end of the day, is we're going to be running into essentially a FOMO event where everybody is all of a sudden buying mining parts, etc., and they will go into, once again, some sort of shortage. On the AI side of things, I think that is clear that NVIDIA has shifted their focus to AI. And I think that all the silicon from GPUs and stuff is going to remain in a shortage. But luckily, like we talked about not too long ago on locals, what we are seeing is that the newest generation that is getting manipulated by NVIDIA right now is not as efficient as the immediate previous generation. This was because of an architectural shift that the GPUs were making, which was a focus on the core side of things. That may change here with GDDR7, but it's safe to say that you probably want to avoid 40 series GPUs and probably avoid the 7000 series from AMD and look at 3000 series, or even really like the 6000 series from AMD as well. So those are kind of some things that you can look at, and the prices are kind of low if you know where to look, right? Like the AliExpress options are really good. Utilizing tools like hashrate.no to figure out efficiency, put yourself in a good efficient spot, right? So you can always go to hashrate.no and you can basically go to whatever coin you decide to mine, right? If you go to like Conflux here, for example, you can hit these benchmarks and you'll get the benchmarks here for the most efficient. Conflux still performs very, very well on all NVIDIA. So you can see here that actually the 4090 does really well on Conflux. So you can come here and look through these. The most common ones you're probably going to see, though, if we're being completely honest, is the most beneficial one that's probably going to have the most coins come out for it is going to be ProgPow. So you could find like a Raven coin or something along those lines. Let's find one. Neoxa will work. ProgPow coin. Hit the benchmarks, and for your progressive proof of work, which is still yet to be cracked by FPGAs or ASICs at this point, and this is going to be what I would consider is going to have the absolute most amount of shitcoin options for you to mine. So having really good efficiency along these lines is going to put you at a pretty significant advantage. So you can go and check all of that out at hashrate.no. It's a great tool. So there we go. If you are going to go the FPGA route, they can be a little bit more difficult, but there's some discords you should get into, like the K1 and so on. And there's a lot of YouTubers that cover these. I'm hoping that what we see in the FPGA market is some more competition on the miner side. We are down from like the crazy 30% fees to about 10%. I think that needs to get back under the 4% mark, like GPUs, to really make it something that I want to pay attention to. I mean, paying 10% tax on something every time is a little ridiculous, I think, in any business model And so that can be a little bit more difficult. As far as that goes, though, are you doing these things to prep? So prioritize, efficiency, prioritize locking power costs, and then try to find the GPUs now or the ASICs now if you're going to go the ASIC route and get prepped, because we are getting to the point to where prices are going to start coming back up, right? Especially with the manipulation of the market that NVIDIA is doing right now. So I think that if it is a game you want to play, then now is the time to purchase hardware and to get yourself in a position to play that game. If it's not a game that you want to play, then of course that's going to be moving over to, I think, something along the lines of buying and hodling the coin if you like. That's not really what I do on this channel though. So my personal plan right now, I'm getting all my ASICs hosted. We're going to be I'm going to be spinning up the GPU farm fully again. It's really hot in Texas. As you guys know, I still have ventilation issues. My power costs have come down, but some of the cool things that I have noticed, right, is the RX 6000 series GPUs, the 6600s will run in this heat. And I'll show you here real quick. So these GPUs will run in this heat because of their low power consumption, and it's 105 degrees outside. There's basically like a couple fans, and they run 24/7 with a 52 degrees Celsius intake on them. So from my perspective, I'm thinking about shifting a little bit to these because these are running really good. Anything above these, anytime I get to like a dual 8-pin, I start struggling in these types of temperatures. That'll obviously change in the winter, but because of my current situation, I really am looking at the 6600s, and then I am looking at, well, pretty much 6600s across the board. Probably getting rid of everything else and kind of focusing there, and then some 3070s on the side for like conflux or whatever, but maybe consolidate those into prep for hopefully availability of GDDR7 at some point, but I don't know that we're going to hit that in an advantageous spot. It's kind of like, it's funny, but this is a repeat of last cycle from the aspect that the 3000 series was really coming out during the bull run, and waiting on and obtaining those once we started getting closer and closer became extremely difficult, right? So I think like when that was happening, it was like, okay, well, I need to just get previous gen and find the gems that I can. And it looks like we're running into a similar problem where I think GDDR7, while I want to wait for it, is going to be in a position of being scarce, probably very sucked up by AI unless HBM takes that over, which I guess is what I'm hoping for on that front. And then you could end up, if you wait too long, I'm feeling like you might not have the opportunity to obtain enough of the efficient equipment that you want to actually generate the amount of revenue that you want to generate, right? The other trend that is happening here that I think everybody needs to pay attention to is that all of these coins that are coming out are extremely quick emissions, right? So this is going to be really important. What is happening right now is there's a new trend. It started with kaspa, right? We talked about it last year. We've talked about it, like this is the reason it's going to be okay with ASICs. I don't know if that's true. What I do know is that by the time we hit the bull run, all of these new coins that are coming out, they're going to be extremely scarce compared to previous cycles. So from the altcoin perspective, the new trend is extremely fast emissions. And this is pretty much across the board. I mean, even if you look at like what our best chance for GPUs is with Dynex, we're talking about an emission schedule that's already, I believe, over 50% emitted at this point. And by the time, you know, we get into the next bull run here, we're going to have very, very low coins per block on Dynex. Now, the idea on all of these is that the supply gets limited, and then you end up with a position where the miners are incentivized purely by the fees of the block reward. This could go one of two ways, right? This could go the way of basically having this artificial scarcity pop off right during the bull run and cause an even higher euphoria on all of these coins, from kaspa to Dynex to, I think Radiant has a really fast one. All of these have extremely fast emission schedules, and you end up basically kind of artificially blowing it up along with blowing up during the bull run. What comes along with that, though, is a potential for all of that to just completely collapse. It's a house of cards, right? Everybody's building up, the FOMO's going, everybody's buying. And then, you know, the miner that mined, you know, fucking 20 million in the bear market is like, all right, I'm out, drops it all and collapses the whole fucking thing. And so you have one, you know, a couple, like, this could be crazy bull run for all these proof of work coins with fast emissions into possibly like one of the largest collapses we've ever seen right after, right? So keep that in mind. The idea is that it's going to distribute it out more evenly. And I think in the case of, like, I know with kaspa, like, it gets compared, like, the reason you do that is so that the GPU miners are doing it. It disperses out better before the ASICs get there, and you drop it off so that the ASICs that are more efficient aren't driving the cost to mint down so far. And I think that timing play is, in theory, could work. The only question I have right now is I do think, specifically as it pertains to kaspa, I think the ASICs are hitting the market a little too fast, right? So these ASICs are hitting out, and, you know, we go back to this profitability calculator, and, you know, they're making like $2,000 a day, right? So these guys are also sitting on it right now with the ice rivers. How this plays out once the KS3s come online is yet to be known. But this isn't just a new thing for kaspa, right? This is a trend. So this is a new trend that's happening, fast emissions. Pay attention to it, because it's going to build up that house of cards. And then, like I said, it could completely collapse. And I don't know which way that goes right now, but it is something that I've been looking at quite closely, because this will be the first time that we've seen it, right? We haven't seen extremely high emissions or extremely quick emissions like this in the past. So we don't really know how the market's going to respond to that. And like I said, it could go one way or the other. But this is a question that I definitely have going forward. Now, we've had this kind of altcoins resurgence here recently, right? Primarily surrounding proof of work coins, you know, as far as like the past 7 days, like everything new that's proof of work is in the green, right? Old coins not really in the green, right? Your Ethereum classics, your Flux, Ergo, Conflux, Ravencoin, Beam, all the old proof of works aren't really seeing this green mark that we're seeing with, or the, you know, these price increases like we're seeing with all of the new proof of works, right? So I think Neoxa just did their master nodes. That's what's driving these prices up. I mean, that is also what's driving the price of BlockX up. This worked before, so I do want to tell you guys this as well. You want to be extremely careful. I think Firo mistimed it, just to be clear. This trend, though, of like part masternode, part proof of work was an old trend in 2016, 2017, right? We had a bunch come out on the ASIC side. You know, you had the dashes coming out, you know, that sort of thing. On the GPU mining side, we had Pearl start to implement this. A lot of them went the way of the dinosaur. Don't get caught in the initial reward proposals from these particular coins in their masternodes and holding that masternode to the point of it not being worth anything, because I've seen that happen a ton with the hybrid masternode proof of work coins. Once again, you sort of buffer yourself here if you're a miner, right? Because you can mine and sell that coin, generate the revenue, and you're protected. This is kind of the protection against everything is mining as far as scams are concerned, right? Like you can call whatever coin a scam, and if I'm mining it and I'm profitable and I'm selling daily and I'm covering my costs and I'm coming out on top, I don't give a shit. It could be it doesn't really matter as long as you're mining, you have that buffer. Anytime you get yourself into a position where you're beholden to that cryptocurrency specifically is where you can get yourself into trouble. Now, I have done this a lot of times, so I know it, right? I did it with Pearl. I did it with Ravencoin. I did it with Bitcoin Z, if anybody remembers that one. Jesus Christ. Excuse my language, but like I've held like a lot of these into the dirt. So when I talk about this stuff, it's not because I have any particular angle against any particular coin. It's just my experience of like what works and what doesn't work, and what put me in a net negative. And what has put me in a net positive, right? I think like, for example, here recently we had BlockX go up. I set my sell target at 9 cents. People were like, well, it's going to go past that. And I'm like, that's fine. I need the 9 cents to cover my power costs and get a little bit of profit so that I can have more fun at QuakeCon, right? Or whatever it is. But like, I'm not going to ride that up and get that hopium, because that's not a guarantee. What is a guarantee is what I can do now, right? And that is really why I think that proof of work will always benefit you from an investment standpoint compared to just buying and holding, right? I consider buying and holding to essentially be playing the lotto personally. You just don't have as much momentum to move. Now, with all of these altcoins kind of exploding right now, what we're moving into now is possibly a consolidation into Bitcoin, because this is the narrative that's going around. Bitcoin price can go full bull run next month if a 200-week trend line occurs. So Bitcoin is preparing a full bull. Bitcoin prices phase in classic style. Market cyclist Cole Gardner believes. In a social media analysis on August 6th, the popular on-chain analyst said that major upside awaits both Bitcoin and the broader market. Of course, a rising tide raises all ships. Bitcoin price action continues to stagnate, but those looking further into the future are convinced that this cycle is just like any other. For Gardner, activity amongst the largest volume cohort of Bitcoin investors, the whales, is one such cause for optimism. Quote, whale accumulation trends are a bull market's backbone, end quote, he summarized. Gardner linked to findings from analytics team Jarvis Labs, which in a response to Cointelegraph article in June, flagged an ongoing multi-month buying frenzy. It is not just whales. Smaller investors known as fish have likewise been increasing their Bitcoin exposure. Continuing popular technical analysis CryptoCon called whales diamond hands thanks to their behavior during the current cycle. The small investor to whale ratio is full force surging. What does this mean? The investors that have been selling this cycle are small. Whales are holding. Part of an analysis from August 3rd read, This is powerful for price, which can be seen in the past when the metric surges. CryptoCon added that Bitcoin's last cycle was characterized by relentless whale selling, something totally absent today. Gardner, meanwhile, reiterated the significance of Bitcoin to stablecoin ratio on major exchange Bitfinex. As Cointelegraph reported, this is currently exhibiting behavior that has preceded every major bull run in Bitcoin's history. It makes a lot of sense if you guys are familiar with the halving cycle that everybody is starting to wake up to the halving cycle, and we're getting extremely close to the halving cycle. There is potential here to a certain extent, because the cat's kind of out of the bag, that the bull run starts before the halving cycle, which would be an interesting turn of events, I think, at the end of the day. What I do wonder is if it turns into what we've seen most recently with Litecoin, which is we almost have a reversal where the run kind of starts and then it ends earlier than we've seen previously, because you don't have the FOMO that drives it up even further, because people are aware of how it functions. And so I kind of bring into question of like, are we going to start seeing earlier pumps, earlier bull runs from the halving cycle with anticipation, with strong drop-offs right off after the halving cycle, and then not as much as we've seen in the past? Maybe that could be the case. Bitfinex whale is important. Bitfinex I'm probably saying, I want to say Phoenix, is the smart money exchange. The whale drives short to medium term price action more than any other entity in crypto, he argued. When such a bullish Bitcoin price breakout could occur, however, remains unknown, with Gardner favoring a Q3 launch. Quote, Bear's other strongest counter argument is summer seasonality, a more potent force than most realize, end quote, he acknowledged. To invalidate the bullish take, he concluded Bitcoin would need a weekly close below its 200-week simple moving average, SMA for short, currently at $27,235 US per data from Cointelegraph Markets Pro and TradingView. So there is potential here with all of the money that's been going into or shifting into alts, shifting back to Bitcoin. So keep that in mind as we move forward. Other than that, I think I don't have much more to cover today. I think this is really what I wanted to talk about. I am curious if you guys are starting to accumulate mining hardware. Are you accumulating cryptocurrency? Is your anticipation that we start a bull run earlier or later? And then basically, what are you mining as well? I wanted to say real quick, a huge shout out to some super chats and memberships in chat. We had Jedology with the 420 Canadian saying thanks for all you do from Crypto Jedo. Thanks for the super chat, my friend. Elmi Aussie with the 200 R's, ARS. Most solid dude in the business. Thanks. So, do you think the S19 Pro 104 will increase in price next bull run, or maybe, or in the halving? Can't stay. I'll see this later. So I'll answer it now so you can, for everyone that's here, and then so you can rewatch it later. If we look at previous bull runs, right, the example I've used before is like the S9 was largely considered dead, but because of the demand for the ASICs in general, from an investment standpoint, the S9 still ended up being a solid bet. You could pick them up for like $175 before the next bull run hit, and the S9's last bull run were still selling for like sometimes all the way up to like $900 a pop, right? So if you are one step previous generation, in my experience, as long as they're reliable units, you are still going to have some sort of profitability on them. In fact, you'll probably have a better chance at reselling those at a higher markup than you would at if you bought a new unit. The other thing that makes them more enticing is that you have more research data available. And so as opposed to all of the new units coming out, which you don't have any research data for, you don't know the reliability on those units, the last thing you really want to be in is a position where the bull run hits, you're spun up an S19 XP and the thing's taking a shit on you, right? So you also have that previous knowledge. You can go look it up, and there's videos everywhere for the S19 104s, right? 100s, all of that. That series is very well covered. There are, you know, very experienced repair technicians on those. There are not as experienced repair technicians on the newer hardware, and you don't know what the reliability of those units are going to be. And on top of that, from previous data, we can definitely say that the price of those units will go up, because even what was considered a completely dead and useless unit in the S9, that went up in the previous cycle. So if we're basing it all off of that, then we would expect that to go up. Retro Mike, thanks for the 99-cent super chat. Remember, we are going to get into Q&A here. Super chats are always appreciated, never required first to be answered because they're the easiest to read. Tagging @SonOfATech will highlight the message orange, making it easier for me to read, and I will get to answering it. Whew. Da da da. Crazy says you look kind of yellow. Man, my thing has been. I need to turn. I keep trying to remember to turn it off. I don't smoke, so there you go. And I quit drinking since what, March. Anyways, thanks for the concern. The halving, says Chadwick's. John, this filter? Yeah. Orange man bad. Ooh, how do I feel about Dynex and the voice changer? I'm all for anonymity within cryptocurrency. Hugo says, that's Tech. How many of these new coins do you think will survive through the next bull run? Well, how many survived last time, right? Not many, right? So, you know, the cream rises to the top, and there'll just be a couple left standing. That's why I say you can't put yourself into a position where you're just holding one coin for forever, you know? So, because you just don't know what the cream of the crop is going to be. I mean, one day it might be MySpace, and the next day it's Facebook, and your MySpace stock is destroyed. And this is why we go revenue. You know? Do. Massless Ninja says, ask Attack, if you had free power and two options, Flux or Dynex, which would you choose? Dynex still makes more money. Free power doesn't matter. I mean, like, it's just not a, like, we're here to generate more revenue. Which generates more revenue right now? Dynex does, so I'm going to mine Dynex. Second TL Mining says, Ask Son of a Tech, what are you leaning towards more hardware purchases, ASICs or GPUs? I'll be probably doing a mix of both. I'm going to try to keep 50-50 right now. Solar says, Ask Son of a Tech, what is your overclock for 6600s? I don't overclock them, and they hit the same efficiency as hashrate.no, so I don't jack with it. They run perfect. I don't mess with them. Not done mining it. I mean, the best scenario for Dynex is that it gets to the point to where home miners turn back on and we have good profitability and good revenue. Am I still doing the D4 Hardcore Barbarian? No, I just don't have enough time for gaming. I am going to game next week, but I think it'll probably be Baldur's Gate 3 and Remnant 2. And probably Rocket League since I'll be at a LAN event. What algorithm ASICs do you suggest? SHA-256. Tech will still be buying AMD GPUs. Yeah, more than likely AMD GPUs. 600 series. Sustainable says, have you noticing issues with the 6650? Yeah, the 6650s run more power because they're overclocked on the core more. And so I would take a 6600 over a 6650. All right, ladies and gentlemen, unless there's a few more questions, I'm going to go ahead and get this wrapped up. I hope you found today's talk beneficial and you got a little bit of insight into what I'm thinking here. Yeah. Geek of All Trades says, Ask Son of a Tech, do you run any custom firmware on your ASICs? No, I'm running low power mode firmware and that's it right now. I do have one just for testing with the Epic hashboard. I really like the Epic, so I'll probably switch over to them fully at some point because no dev fee and all of that. But they're a little bit hard to get a hold of, right? I know large miners that are, you know, stuck with like, they got like 10. Like, but they got like hundreds of miners to get installed with them. So, yeah, they're not manufactured quite enough yet. Kilbossa says, how much longer do we have to wait to sell 5700 XTs? How much are you going to sell them for? I don't know. 5700 XTs are probably going to perform quite well, right? This cycle still, just because we do have, I think, as far as the customizability of the BIOS, the 5700 XTs are unique. And no new GPUs allow you to do that. So I don't know where I'll be at with that. I'll probably keep one like rig of 12 of 5700s around just to keep playing with. But it is probably time to get rid of them this cycle. Wine Something says he has an update on Dynex wallets 95E1 and ZEHK. I think there are 1.0 in SRB and match the dev fee of 3% before and after changes. You'll have to make an update video. I'm not going to be able to put that together right now. ET, thanks for the $5 super chat. Says, do you think a bunch of 1660 Super, 6600 XTs, and 6700 XTs will be okay for the next bull run? My 6700 XTs overheat. my 6600s don't. 1660 Supers don't, but 1660 Supers are pretty much ready to get pieced out, in my humble opinion. Solar Miner in Spain says, ask Avatech, which AMD 6 series cards would you recommend for Dynex? 6600. I mean, you could go the route of like what the most efficient being the 6800 XT. But like I said, like from a heat perspective, those are still giving me trouble. They're just not as reliable. There's like this weird balance of just trying to find shit that runs 24/7 for me, right? So when I look at those things and I get more and more experience with the GPUs, a lot of what I lean towards is like what is efficient and what doesn't reboot on me and what can handle high temperatures. Right? All right, I'm out. Thanks everybody for watching. Hit the like, comment, subscribe, and notification bells down below. I will see you next Tuesday.